Hi everyone and welcome to today's morning report on Monday the 8th of December with me, Rich Ferry, market analyst at Handtech Markets. The European trading session has started off on a negative footing, and that's certainly come on the back of this disappointing data that we've had out from Asia today. Both the data from China and Japan came in lower than expected, worse than expected, and Chinese trade data both missed on expectations on both imports and exports, both falling away. And also the Q3 GDP figure for Japan was revised down to 1.9%, and that's showed that the recession in Japan is worse than expected, worse than previously thought anyway. So it's certainly put a bit of pressure on these markets today, and that pressure is being seen in both in both equity markets and also forex as well. I'll talk a little bit about them in a minute. But that move came after also that we had a slightly underwhelming close on the Wall Street markets after that very strong payrolls report on Friday. The S&P 500 only up 0.2%. And certainly now what we're seeing is the European trading session starting negatively, 0.7% down on FTSE, 0.5% down on DAX. The FTSE continues to underperform the DAX, and I'll talk about FTSE being my chart of the day in a minute. In terms of forex markets, this strong dollar move that we've seen in the past week or so continues to push higher. Now is very close to this March 2009 high of 89.624. Very, very close to that level now. So the dollar continues to remain strong, trading positively against all of the FX majors, other than the Japanese yen today. Maybe a little bit of flight to safety in terms of that, but certainly it looks like the dollar is remaining very strong. And there's not actually a great deal of data out today, but I think this dollar strength could well continue. And certainly the commodity currencies specifically are being hit quite hard after that disappointingly weak Chinese trade data. The Kiwi is down 1%, the Aussie dollar is down 0.5%, so both of those being hit quite significantly today. The only real bit of data that we've got out today is this ECB announcement on the ABS purchases. So that's at 2:45 UK time, so that may well have an impact on the euro. If the ABS purchases deemed to be coming in higher than perhaps anticipated, that would suggest that the programme is going well, and perhaps there is more scope for that to improve, and maybe the euro would strengthen on the back of that. So just watch out for that at 2:45. That sort of takes me on to my chart of the day, which is the FTSE 100. Now, FTSE had a strong day on Friday, but again, it just seems to have peaked out underneath the reaction highs. 67.53 was the reaction high that we got early to mid last week, and that just continues this sequence of lower highs that we've had on FTSE. And again today, the FTSE has just in the first couple of hours been under pressure to the downside. It doesn't look as though FTSE is ready to break out yet, although if you compare the FTSE to, say for example, the DAX and the S&P, DAX and S&P are both up at all-time high levels and pushing on. FTSE is not really able to garner any sort of upside momentum. It's still languishing within this range over the past week or so, and it looks like it's going to continue. Looking at these momentum indicators, once again the stochastics have rolled over on the hourly chart. The RSI also gathering momentum to the downside, so it just looks as though this range phase in FTSE is going to continue for now. Momentum in moving averages all flat as well. So just at the moment, FTSE doesn't seem to be able to get this any real upside momentum going before the correction sets in. So just bear that in mind. Sort of FTSE remains this range play. It sort of seems to be coming ever finding support around about that 66.40 mark, which were the two lows that we saw in early December and late November. But it certainly looks like FTSE is, as I said, just in this continued range phase at the moment, having sort of had this run higher. It's sort of flattened off now, and it's in this consolidation phase, and that seems to be going on. No real indication of that changing anytime soon. And if it does change, I'd imagine it would probably be dragged up by other indices rather than going up on its own volition. Anyway, I wish you good luck in your trading on FTSE today. Certainly looks like it's a bit of a corrective day across the board, and I will speak to you later. Thank you.